Hello, chart watchers, and welcome to this Friday, May 18th Market Watchers live show with your hosts, Tom Boley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, market's continuing to take a little bit of a breather. You can see today we do have the Dow Jones Industrial Average up 32, but the S&P 500 is down 2.5 points. The NASDAQ getting hit a little bit from the semiconductor group, down 8 points today. Russell 2000, though, continues to push higher, up 3 points. 10-year Treasury yield backing off. We've seen a pretty steady uptrend over the last week or so, but we are pulling back. We're down about 3 basis points to 3.08% there. Volatility index continues to drift lower. We're now down to 13.25, down a little bit more than 1% today. Industrials continuing their recent strength, as you can see, after gapping down back on Tuesday. We've had mostly higher prices within the industrials. Commercial trucks and vehicles having a very strong day on the heels of Deere's earnings report. Deere & Company, as you can see, up $9 today, having a very strong day. Also noteworthy, aerospace stocks breaking back up above recent highs. And one of the primary reasons, Boeing. Boeing is up $7.50 today, clearing the 345 area that has provided some resistance of late. And then finally, those semiconductor stocks getting hit a little bit today because of Applied Materials. Applied Materials came out with their report last night. Beat top line, beat bottom line, but did offer some soft guidance on their revenues going forward. And you can see Applied Materials taking a pretty big hit, challenging some recent lows from late in April. With that, let me bring in my co-host, Erin. Happy Friday, Erin. You got a 4-day weekend coming up.
I know. I'm very excited. The mountains are waiting for me with no Wi-Fi. I'm totally unplugging.
That is crazy. That's crazy talk.
Yes. Well, I will have my cell phone with my trading accounts on it. You know, I'll have my price alerts and everything ready. But no, I'm planning on pretty much checking out, and I'm very excited to do so. Hey, before we move on though, what up with the caps? And
really?
I know it's just very strange. Both teams, Tampa Bay and Washington Capitals, we're talking hockey and everybody hates it, but they're in game 4. They're tied. 2 games won by Washington away and 2 games won by Tampa away. So apparently it's actually an advantage to be playing away from home, it sounds like.
Yeah, I've been teased for so many years by Washington area sports teams. You know, I thought this one, and maybe it still will be different, but we went up 2-0 on the road. We came back. I'm sitting there thinking, you know, I should have never been thinking ahead. But I'm thinking, hey, you know what? We got the next 2 at home. We win these 2, series over. We're in the Stanley Cup Finals. Boom.
Yeah, well, last night, honestly, anybody could have won that game. They both played really hard. It was just a matter of who got the last puck in. So,
yeah, actually,
anyway, let's get into that schedule.
Yeah, I would say that the Caps actually outplayed Tampa Bay yesterday, but you know they don't have the pucks going their way right now, so better change that quickly or they'll be out.
Yeah, they call that puck luck.
Yep.
So. All right, the weekly schedule on Monday and Tuesday, since I will be having a 4-day weekend. Julius de Kempener from Netherlands, right there, is going to be co-hosting with Tom. Should be fun. On Tuesday, Julius is going to do a workshop for us, and I'm not sure what it's going to be on yet, but I'm sure he'll fill you in on Monday. And David Keller will be our guest on Wednesday. So it should be a good week. We're shaping it up to a good one next week. Today's agenda, however, packed full, of course, everything stock charts. Tom and I are going to actually go through a few things that we like because it just wasn't our folks up in the mothership were just not able to do it this morning, so we are set to do that. Scooter report will be following that. 10 and 10, our first symbol is going to be Southwest Airlines, LUV. We haven't looked at that in a while. And then finally, we'll finish with my sentiment update. And with that, I'm going to pass it to you, Tom, for those technical headlines and news.
Sounds good. Yeah, 10-year Treasury yield taking a little bit of a move back down today. There was no real economic news out. So the bond market didn't have anything really to key in on. And I think because we've had such a big move and there's been so much selling in the bond market, sending yields higher, I think we're just getting a little bit of a bounce in bonds, maybe a little oversold bounce as a result, pulling back here on the 10-year Treasury yield. I still believe we are in a very significant uptrend. Of course, a pullback, even to the rising 20-day moving average back down close to 3%. I wouldn't rule that out. But in the more intermediate term, I think the overall trend here is higher, and I would continue to view this as a situation where we're likely, more than likely, going to see higher yields as we move down the road. As far as some of the things to talk about today, I thought what I would do when we had Julius on the other day, and I'm sure we'll get into some more of this Monday and Tuesday, but when Julius de Kempenaar was on, he talked about using the RRG and the fact that energy, I don't think too many folks would dispute that energy has been the clear leader. I wrote about that a little bit in my blog this morning. I was surprised when I looked at 3-month returns on all the various ETFs that there were only 3 groups that have been higher. Energy was higher by 15 or 16%, then technology, I think, by 3%. And I believe it was consumer discretionary up a fraction. And when Julius did the RRG charts, he actually showed that over a longer period, that the technology and consumer discretionary still looked pretty good, even though in the short term, energy has overtaken both. And so I thought what I would do today, I went through all of the industry groups within technology and consumer discretionary, and I just jotted some down that I thought were interesting. So let's go through some of these charts. Within the technology space, let's start with software. Software has been one of the best performers in the market for quite some time. You can see recently, just a little over a week ago, we broke out the highs that took out the March highs. And if you recall, the stock market, if you look at the Dow and the S&P, we topped back in January, and you can see the software has continued to put in a couple of new highs since then. So on a relative basis, software continues to be a great area of the market. And if you look at the daily chart here on the recent pullback over the last week or so, we came back down about 2.5%, 3%. And when we did so, we hit that rising 20-day moving average, and we're bouncing right off of it. So technically, software to me still looks like a very solid part of the market. Computer hardware, DJUSCR, this is home to Apple Computer, or Apple Inc., I should say, and is very strong. Beautiful move up. Look at the volume coming in throughout the first 10 days or so of May on this push to the upside. This chart looks a lot like Apple because Apple is a huge part of the computer hardware space. And here is the Apple chart where we've seen that breakout, very strong volume on the move. I think we're in a little flag pattern. I don't see anything wrong with this group other than the fact that maybe it just got a little bit overbought. You can see the RSI had moved up into the 70s, and we're pulling back, maybe seeing a bit of rotation. But overall, this is another very strong part within technology. Let's move on to internet stocks. Internet definitely taking a little bit of a breather, but and we haven't seen the new highs. You can see as we go back to the beginning of February and then again in the middle part of March, and look at where we just topped out recently. Not quite the same as what we were seeing in software. So within the technology realm, we're seeing rotation away from internets a little bit and more towards software. But I think the internet still look healthy. I like this breakout recently above the 1620 area. This pullback, I think you've got pretty good support either at that rising 20-day moving average or at that price support level around 1620. So as we pull back, I think the reward to risk is actually starting to build up rather bullishly and nicely for the internet space. Semiconductors. Got to talk about the semiconductors, especially on the heels of a not so great earnings report out of Applied Materials. Actually, again, their numbers weren't that bad. And I'll talk about earnings if I have some time in just a bit. But I will say that Applied Materials beat on their top line, $4.57 billion. Market was only expecting $4.45 billion. They beat on their bottom line, $1.22. Market expecting $1.13. But they guided their July revenue lower. And so as a result, Applied Materials getting hit pretty hard. But when you look at the semiconductor group as a whole, we've got that golden cross for the first time in probably about a month and a half or so, breaking back up above the 50-day moving average, which I think is important technically. And on the pullback, you got some gap support that it's testing around 3,500. And even with that news earlier today, or well, really last night after the bell with Applied Materials, we were down at the 3496 level. We went a little bit below 3,500. And we are back to 3518. So there are some buyers coming in on the weakness here in the short term on the semiconductor group. Let's pull up that Applied Materials chart. Not looking quite so good. Clearly huge moved lower. And look at the volume coming in. The heaviest volume over the past several months. And we're not even to the halfway point of the day yet. So this is a big move down on applied materials. Now, volume and moving lower, that combination is not good, but I want to hold on to this support area on applied material. So I'm going to watch 45. We're currently at 49. We do have a little bit of short-term support around 48, but I think the big number on the chart to watch is 45. If applied materials were to close back below 45, that could change the character of their chart, which I believe is still bullish. We could pull up a weekly, long-term weekly chart and see that this move down here on a weekly chart, if we were to go back and take out this 45 level, I think that would really start to paint a picture of a chart that has rollen over. So I would be really careful there. But, this area right around 47.50 on a weekly chart, you can see double top, breakout, heavy volume on the breakout. And as we've come back down, we haven't had a weekly close below 47.50. So that might be your first clue, is if we were to close out a week below 47.50. But so far, so good. We are holding. This could be sideways consolidation. And if you're wondering why I think this low is so important and not this one, it's because off of this high, this was the lowest point, and then we moved to a new high. So I think that prior high, in an uptrend, you have a series of higher highs and higher lows. And so I think that 45 area on applied materials is a very big one. Let's move on. Those were four of the key areas I wanted to talk about in technology. I've got a few more in consumer discretionary. So let's talk about the consumer discretionary group and start off with home improvement stocks. Home improvement stocks did take a little bit of a hit recently with the 10-year Treasury yield breaking out. Both home improvement and home construction stocks came back down. However, I think home improvement stocks are holding up pretty well. Yeah, we also have to factor in that this gap down a few days ago was as a result of Home Depot coming out with their report, which was not particularly strong. They did miss their same store sales, I think, for the first time in 7 quarters. And so, we had a little bit of a double whammy on the home improvement group in that we did have higher rates. We had a not so great report out of Home Depot. And yet, notice that throughout the past few weeks, we've broken above the 20-day. The 20 is broken above the 50. We've gotten that golden cross, and we continue to hold the rising 20-day and trend higher. So I think things are improving here, but you can see we're still way below where we were in January. So not going to be one of the best relative performers, but strengthening nonetheless. Home construction. Hard to not talk about home construction with the 10-year Treasury yield doing what it's doing. And you can see that this is a stock or a group of stocks that has really struggled. Broke down. That was the day that the yield broke out to the highest level in 7 years. And home construction, as you might expect, took a hit based on that. Now, the part that's interesting about home construction is that there tends to be somewhat of a positive correlation between the direction of interest rates and the direction of home construction stocks. And if you think about it, if Treasury yields are going up, typically what that indicates is that our economy is either strengthening or expected to strengthen. And as our economy strengthens, it means more jobs, higher pay, and so forth, things that make housing more affordable for many. So there is, it does, from a common sense perspective, I think it does kind of make sense. So I believe that this weakness that we're seeing in home construction is going to set up an opportunity at some point. Now, when? That's difficult to say. On a weekly chart, though, notice we traded above that 20-week moving average for a long time throughout all of 2017 as we had a huge advance in this group. And now we've moved below the 20 and we're continuing to drift. We're really struggling to get back through. So I would be looking for one of two things to happen on home construction. I would be looking maybe for a reversal down near support if we get to about 720, 725 to the downside, or I would wait to get that breakout above the 20-week moving average. I think right now we're kind of in no man's land as far as trading the group. It is drifting lower, but I believe we're in a bull market. I don't like to short in a bull market, so I'm going to wait and let this group set up for me. I do think eventually it will turn back to the upside, but it may have some more pain to go, especially if the yield continues to move higher, because that does, at least in the short term, I think, put a lot of the traders on edge with respect to the home construction stocks. Let's talk about media agencies. This is a group that I started liking back at the beginning of the year, and it's still in a longer term downtrend, which I'll show you on a weekly chart in just a second. But look at all these tails. Every time this group tries to get through 565, it fails. Today's high, 565.58. We're currently at 561. But when I see all of these failures over multiple months on the daily chart like this, I really pay attention if we finally get that breakout. So watch this group to see if we get 565 on a close. If we can break through that, get some volume coming in, I think this is a group that's going to make a run for 590. If we pull up the weekly chart, this is what I was talking about. Here's a long-term downtrend. And if you look back over the last couple of years, the market's been higher, but this is a group that's been lower. But leadership changes. And so if we can get back above 565 on that daily chart, take a look at where the 50-week moving average is right now, 566. We haven't traded above that 50-week moving average, haven't closed above it since back in the latter part of 2016. It's been a long time. So if we can get a breakout on the daily chart, we'd also be getting a breakout here on this weekly chart, and that could really change the fortunes. So far, we might have what looks like to me a bottoming head and shoulder pattern, left shoulder, neckline, head, right side of the neckline where we actually went slightly higher, which I like. Came back down. We didn't break that low, which would have negated this pattern, but we did go a little further than I would have expected, but we are coming back up. Watch this group. I think a breakout, especially above, say, 570, would really start to paint a more bullish light on this group. A couple more. Let's take a look at the footwear stocks. And we can take a look at the long-term chart. But look at this beautiful flag. Got the flagpole, flag sideways, and we just got a breakout. Nike leading this group to the upside. I think footwear is going to be a very strong group throughout the summer. So I'd certainly keep this group on my radar. Broadcasting and entertainment, DJ USBC. Not very good action, as you can see, been going lower for quite some time. But look at the lower low here and look at the higher PPO. So we've got a positive divergence. We're trying now to get through the 20, which has been a big problem over the past few months since we topped in January. This would mark maybe the third day in a row that we're able to close above or at that 20-day moving average. We haven't seen that since back at near the highs. So I think this is at least the start of something. And if we can get through the 50 with some volume coming in, I think broadcasting and entertainment could start to make a big move to the upside as well. So this is a group to keep an eye on and to watch. Broadline retailers. Broadline retailers, big gap up. Of course, that was Amazon's earnings. It's been consolidating sideways, but I look for another move back up over 1,700. I think this is a strong group to keep an eye on. The clothing and accessories. This is a group that definitely is strengthening again, and as it's broken back up above its moving average, check out the volume coming in. Very nice move to the upside. It's been holding the lows since that January peak. We have moved to higher highs, and so far holding those lows. So I think as long as this group stays above, say, 305, I think that it is a group that could lead us into the summer months. And let's do one more. Let's do the auto parts. DJ USAT, Dow Jones U.S. Auto Parts Index, beautiful move to the upside, taking out a double top around 560, just above 560. I think this is a group strengthening. Look at the PPO, best it's looked in the last few months. So this is another area very strong. I did mention earlier, rough morning for earnings, or last night for earnings in terms of Applied Materials, but Applied Materials wasn't the only one. Nordstrom's JWN came out. They beat on the top line, beat on the bottom line, but they missed their same store sales estimates, and they are near a major support level. Watch JWN closely. It's actually at a pretty solid reward to risk entry point if you like the stock, because if you close much below, if I close below 45, I'd probably be out of the stock. So I'd keep a very tight stop, but it is challenging some key support. Campbell Soup. A lot of these staple stocks really been struggling. Look at Campbell Soup. It's been declining for quite some time. Well, here's why. They missed top line. They did beat bottom line, but they lowered their guidance for 2018. That is usually not a good thing. PPO has turned down. Look at the volume coming in. Everybody trying to jump, bailing ship here on the on Campbell Soup. And let's see, there was one other, AstraZeneca, AZN, missed on their top line, beat on the bottom line, big gap down earlier, but it has made up most of those losses with a hollow candle. So pretty good action since then. Wanted to mention two stocks or two areas of the market to really keep an eye on for breakouts. Talked a little bit about broadcasting and entertainment, how we're trying to get through the 50-day moving average. Talked about media agencies. How about the transports? Wrote about these guys in the blog this morning. Transports, look at all of these failures at 10,800. If you want a strong stock market, it really helps to have a strong transportation average. And this transportation average has been stalling at 10,800, needs a little push. Watch for a close above 10,800. I think that would be a very bullish signal for the market if we can get that. And one way to play the transports, the IYT chart's very similar. Get through 195 along with the transports moving through 10,800. I think the IYT would be an interesting play. And then finally, the biotechs, DJUSBT. We did make this breakout above 1950, pulled back. We're holding the rising 20-day. I think if we can get a breakout above 1975 again, that would be bullish. One way to play, and I actually own this, the IBB. Look for a breakout above 108. I like the fact that the volume came in, went back through the 20. So I'm using the 20-day as my stop to the downside. But I like the biotechs. I think this is a group that appears to be ready to run as well. Last thing I wanted to mention, we're going to go to a weekly chart. I'm going to give you the Ugly Weekly Candle Award, which goes to Baidu this week. Baidu, check out this false breakout. Triple top, quadruple top, whatever you want to call it, at 270. Earlier this week, Baidu was at 284. We are now back down at 257 and change. Very, very weak here. Now, the good news is that we have seen the weekly PPO reset all the way back down to the center line, turning higher again. So I think that the short-term failure will probably just be short-term, but I'd be looking maybe for that rising 20-week moving average test, which is still another $13 lower. And with that, let's go ahead and move on. I know I ran a couple minutes over, but we do have Everything StockCharts. Erin, I'm going to let you go ahead and start. What do you have for Everything StockCharts today?
All right, sounds good. I decided that what I wanted to talk about are ChartStyles. So let me get my screen here and I'll start talking to you about ChartStyles. Okay. So let's just start right off the bat what a chart style is. And all I have to do is go into, let's look at the Dow because I did get that signal on it. All right. So a chart style is how you have your chart set up. And actually, I'm going to go over here so I can really mess around with these. Let's just pick out this one. All right. So my chart style for market watchers is obviously it has to be big enough to fit in the screen. I like to use this plum color. I have, you know, my OHLC bars, my PMO. So this is how I set it up. And the way you can look and see obviously how these are set up is going down and setting your EMAs, setting your indicators, however you wish to do it. And once you have it set up the way you want, obviously you'll probably want to go back to it a couple of times. So you'll want to save it. If it is the one that you use all the time, then you want that to be your default, because at any time you call up any chart, it'll always come up first. But I like to look at weekly charts. I like to look at monthly charts. I like a 10-minute bar chart. I have a lot of different ones that I like to use. And in the Market Watchers account right here, we have a couple of different ones. I actually have your old chart style, Tom, right here. Oh, nope, I updated it to your new one. So anyway, I can immediately change the chart into what I want by using these chart style buttons here on the left. And there you go. So that's Tom's relative chart. And this chart, the relative settings, are available to you in the Market Watchers Live recap. I'm going to show you that when I finish. But here's how you can set up relative charts. And again, everything you want, you set it up the way you like it, and then you want to go ahead and save it. So I'm going to just change this one slightly. Let's add the PMO on here. Here we go. Where is it? There it is. All right, and I'm going to set that one below here. So So the PMO is now on here, but it's on the bottom. So this is what I want to save. I like this one, so I'm going to keep this. So how do I save it? Well, we go down here, and this is where your chart styles are. I don't want it to be my default. I think it's a great chart style, Tom, but I don't want it as my default. So what I can do is either replace one that I already have in here, and here are all the different ones. So I'm going to update this one. I'm going to change my Tom's relative. And there we go. So now when I call up Tom's relative chart, it's going to have the PMO on it on the bottom. Now when you save your chart styles, the other thing that's great, and you just saw me using them, are these buttons on the side, because it gives you a quick way to immediately change your chart style to what you like. So this is the weekly chart in my decision point chart style, and I have a monthly version right here. So I like the log scale on my monthly charts, and I use a certain time frame on my monthly charts. So all of these are the way I like them. So how do you get those buttons in there? Well, let's go ahead. Let's take one. We'll take your daily chart here. Actually, I'm going to create a new one so you can see. So let's go ahead. I'm going to change this. We'll start it off as, let's see, I want to go into kind of a decision point look. So I want to make this, we're going to move this to a 10-minute bar chart. And I'm going to want to change my time frame for sure. Let's look at 10 days. All right, so there's a pretty 10-minute bar chart I have of JP Morgan right here. So I don't have a 10-minute bar chart style yet. So I'm going to create this new one. And actually, I'll take the scooter out because that doesn't work on the 10-minute bar chart. So we don't need that. And there we are. Okay, so now I have my 10-minute bar chart, and I'm going to leave it the way it is. Maybe I'll make it candlesticks. Why not? All right. And, you know, I'm seeing it's all kind of crowded, so I think I'm going to make it not as many days. That looks a lot better. Okay, now that I have what I like, now I'm going to save it. This is going to be my 10-minute bar chart. So I'm going to add a new one, and I'm going to call it 10-minute bar. And notice under here, you can choose a button number. You can have 9 buttons. I'm going to go ahead and I'm going to make this button 9, and I'll add it there. And now my last button is my 10-minute bar chart. So I can go from Tom's weekly chart. There's your old sunset. Bringing back memories.
Wow.
Right?
I got to go back to my therapist. Thanks.
So there we go. That's now there's a couple of other special things. For example, you can add a chart style button right here and just come up with the chart style. You've got the name, you've got it all set up here. So if let's just say 10-minute bar, but I'm going to make it number 2. There we go. And I add new. And now there it is, 10-minute bar chart 2, 10-minute, and then I had the old one in there, but that's how you can change those chart style buttons. So I find this to be extraordinarily helpful. As you probably noticed, Tom and I do this a lot. It's a very easy way to go from, you know, my daily into my weekly, etc. So there's my monthly. The other little trick that I want to show you is we always show you candle glance, and I'm going to give you a little more time here, Tom. Let's see. So I'm going to go into candle glance, which is, there it is. And what you're going to notice when you call up candle glance is their charts are going to look like this. They're going to be this default, excuse me, white, you know, charts. I don't like that. I'm just going to be honest. I want it to look like mine. I want to have the PMO on it. And you can see here, in this case, These are 10-minute bar charts, but they don't have the PMO on it because this is my Market Watchers account. So I'm really only interested in those 10-minute bar charts. So I'm going to go take us back into my account. There we go. Let's make this big. And I prefer, so let's view all, show you my candle glance again. All right. So notice I have the PMO on it. I have, OHLC bars. It is not the same as this. This says candlesticks. It has no indicator on it. So it's not what I want. So I had to create my own. And the way you do that is it's really, really quite simple. So we're just going to go into, let's just pick a chart. All right. So I want to set up my candle glance. And right now I already have one. And that's what you do is you name it candle glance and set it up exactly how you'd like it to look. In this case, like I said, I moved it to 10-minute bars. Of course, my annotations got all crazy here. Let's just take forward, I think is that one. There we go. So this is how I want my candle glance. And once I made it the way I wanted, all I did was add new and I called it candle glance. And then I don't have it as a button because I don't need it as a button. If I'm going into candle glance, I'm looking at a view all version. So I don't need to make a button of it. So I chose not to do that. And then you add that, and that's going to be what shows up every time you do candle glance. And that's my favorite and most useful, besides the scan engine tool, on StockCharts. So that's my contribution to everything StockCharts. And ChartStyles are the way to go. You need to have an easy way to get from your weekly to your monthly to your 10-minute bars to your trading style to all of these different ones. And of course, having a custom candle glance is really, really helpful because, like I said, I go through and do my scans and I want to see the PMO. I want to see the last 6 months. I don't want the last 3 days, so I set it up exactly like I like. And Tom, I pass it to you and go ahead and show us a little trick or two. Can't hear you. I don't know if you muted.
Sorry about that. I did. That's unusual. Normally I don't.
I know.
Anyhow, I did want to show quickly the additional data panels. I believe Bill Shelby or maybe Grayson came in and talked about this shortly after it was added to StockCharts. But if you're on the members dashboard and you look at these little gears over here on the right, right now, if you look at my page, I've just kind of got a very basic page. Actually, no, I added those. I wanted to take those off. So if none of these are checked, essentially what you're going to have are just the Pro Control Center, the market overview, market movers, which you can adjust as you'd like based on whatever your preferences are, and then your chart list down below. Okay, but if you click on this, you have some options to really make this members dashboard much more informative, depending on how you want to set it up. So first up are these additional data panels, and if you just check that off and update, you're going to get 3 more of these panels similar to this market movers one here. So now I can go and change this to top 10 scooters, the ticker cloud, decision point signals. So if I click on that, you'll get the decision point, where they stand on their different models, which I think is pretty important. And you've got predefined alerts. If you wanted to set those up, you could have a window just for that. The ticker cloud, for those of you not familiar, the ticker cloud, these are just the most popular ticker symbols that other StockCharts members or users are looking at. So if you see one that's really big, like IBM, then chances are something is probably going on there. Occasionally, you'll find some small stocks that are, for whatever reason, just beginning to trade a lot heavier. For instance, here's Riot. That's that blockchain. Click on that. Maybe something is going on. You can see the last couple of days we've had a move. Well, that's probably, getting some people excited. A $7.50 stock that moved almost $10 in 2 days, that'll stir up some interest. So you see that on the ticker cloud. But anyway, you have these different options on setting these up however you want. And so one of the things I like to do is to set up the scooters and the top up. This is telling me which large cap scooters have moved today and how much they've moved and what their score is. And then I've got mid cap and small cap set up. And I also have those set up to top ups. So very quickly among small caps, mid caps, and large caps, I have 30 stocks that are making big scooter moves. So I have 30 potential short-term trading candidates. And if you hover over the ticker symbol, it will show you a brief little chart of what's going on. So you don't have to pull up each individual chart. You can actually just take a look. Like this one, WRG, looks like it might be trying to make a pretty good breakout here. So gives you some quick information there. Also, you can add in your scans and alerts. And when you do that, down here, you've got your scans. So if you've saved any, you can see you've got the scans that you can pull up very quickly. You can add a new scan. And then here are your alerts. I don't have any alerts set up on this account, but if you set up alerts, they'll show up here. And then you've got your chart list still down at the bottom. And then finally, the last thing is you can add chart list panels. So for a couple of your chart lists that you're, want to keep track of, you can see that they are listed here. Now, this is the market update. This is what I put together for the very beginning of the show. And I can view this in candle glance, which is how I show it as we go into the, and start the show. But I also could show it in summary form. So it's telling me which one's doing the best, which one's doing the worst, kind of a thing. And you can show and hide different columns. There's just a lot of information that you can get to here on the members dashboard. And I just want to make sure everybody's aware of how you can pull all of this up. So that was basically what I wanted to do, just give a very, very brief demonstration on that. Again, I think it was Bill or maybe Grayson that came on when this first hit at StockCharts, when it first became a new feature. But I'm sure there's a number of you maybe who haven't seen this or haven't used it, but it's very useful. So just wanted to give a quick reminder on that. So with that, let's go ahead and wrap up everything StockCharts. And just as a quick little reminder, you had Erin showing you the various chart styles and so forth. And then I had a look at the members dashboard and how you can use these gears to adjust the way your account's set up. One final comment I do want to make on this is that once you establish this and you go to another website, when you come back, it'll be saved for you. So you won't have to keep redoing it. It's going to be saved however you set it up. So, but also keep in mind, if this is the way you want to keep it, if you make a change, you're going to have to go back and change it again because it won't save, or it will save to that newer setup. So if there's some way that you want to look at it continuously, just make sure that you do that. Now, I believe if the different browsers, if you pull it up in 2 or 3 different browsers, it's going to save however you have it in that browser. I believe that is correct. I'm now probably about to show my ignorance about technology, but yeah,
I believe it's the same on your browsers, but I don't remember.
I think if you make the change, I thought maybe Bill had talked about that, or maybe it was Grayson, that if you made the change, say on Safari, and then you go over on Google Chrome, and you go
it should be the same because it's saved in their cloud.
I'm not sure. Maybe it's something that we can get on next time. But
a definitive answer on. And one thing I didn't show about ChartStyles too is the fact that if you call up anybody's chart on the page and you like that chart style, you can save it just like I was showing. So if you pull up, for example, Tom's relative chart from the Market Watchers Live recap, and you like that, you can just do like I did, add new, and now that chart style is all yours. You can make a button. There's also just some pre-done chart styles in that drop-down menu. I think each of us have their own version. Is yours still sunset on there? I'm not really sure.
It may still show up as my default. I still use that actually most of the time on another account, but I just don't use it here on the show. I think my charts, I think things show up a lot better with that white background. So I think that's the main reason why.
Yes. Yes. And we do get a lot of compliments from that.
Yes. All right, well, let's go ahead and move on because we do have scooter reports coming up. Want to make sure we take a look. What we're going to do, we always try to mix it up and do things a little bit different with the scooter report. So what I'm going to do today is I just showed you how on member dashboard to show these technical rankings and how we can look at some of these different stocks that are making big moves today. I'm going to pick a few of these out and I'm going to give them to Erin and she's going to pull them up on her screen. So that'll be part of it. But then I'm also going to go into the scooter reports here. And under the search, I might go into like small stocks. And I mentioned earlier, I'm waiting for this breakout on media agencies. So maybe what we can do is pull up media agencies and take a look at the scooters. They're in order here and pull up maybe a stock somewhere on here and let Erin take a look at that as well. So that's kind of what I'm going to be doing behind the scenes, but I'm going to let Erin go ahead and take the screen. And while she is doing that, I'm going to give her her first stock, which is Deere & Company, DE. That's the top scooter mover today on the large cap stocks. They reported earnings, having a really strong day, and scooter has moved up from about 56 to 77, 78. And what are you seeing on your chart for Deere & Company, ticker symbol DE?
DE, let's check it out. Oh, wow, that is quite the breakout. I'm going to throw out that annotation tool. But yes, we got that PMO buy signal back the beginning of May. Well, it looks like the second week. And, it's been working pretty good so far. It came in after that gap. So I think once we hit above that 5-day EMA is when we ended up getting that crossover. It comes in oversold territory. That's always good to see. I would be a little suspect just of the volume pattern here when I look at the OBV. Back here we got all that in accumulation. I think that's great, but there might be some need for some more distribution. I don't know for sure, of course. Let's see. So we have that declining tops trend line, and that was clearly taken out. And then you can see how it consolidated above that 200. This one, of course, I think they look great, but I wouldn't, it'll be nice to hopefully see it pull back a little bit. Whoa, I didn't want that to be that solid. Here we go. So you can see we got that. Today is a really major breakout because that's coming in at these lows. So I think the chart still looks good. I would hopefully want to watch it pull back before I get back in, but I think the chart's still set up very nicely and the scooter's now in the hot zone.
All right, next stock is Verisk Analytics, VRSK. V is in Victor, RSK. This is a stock in the Business Support Services Index. Really got hit earlier in May with its earnings report, but has come back. What are you seeing?
Yeah, well, the PMO is really flat right now. I would like to see it rising a bit longer. But when you see a PMO, and we can see that it started back in November of last year, when you see it oscillating above the zero line, that implies that there's some internal strength there. Again, I'm not happy with the way this OBV is set up, but this is as of yesterday. If we close higher, it will turn up, and then we'll get rising bottoms here. So it should be okay as far as the volume goes. I see a flag, and today we actually got the breakout. If you look in the thumbnail, I think I can still annotate it here. Wait, let's get back to a regular line. So I'm going to come over in the thumbnail. You can actually annotate here, but it doesn't save in the thumbnail, but I wanted to give you a look at it. This is a pretty standard flag here. You can see the nice long flagpole after that earnings issue, and it bounced off the 200-day EMA. So I like that breakout. I would be expecting things to move a bit higher here. Watch that PMO if we can sustain that move higher, which it should if we close up like we are. So,
all right, one of the stocks on the mid cap list that moving a little bit, it's in the home construction space, which has been under a lot of pressure lately. Toll Brothers, TOL, starting to show a little bit of life, holding on to support. What are you seeing with the PMO?
All right. Well, I know we've been talking about real estate not doing so well. I would, with the rising rates, which would make me a little suspect personally of the home builders. And there's some pretty strong overhead resistance here that was formed, and we're just about there. But support's holding nicely.
I didn't say it.
Oh, okay. I'm just hearing things. All right. So you can see it hit that support level. It's bounced off of it nicely. It's really too bad we couldn't see this one earlier. We did get the bull kiss, is what I call it, the fake out because of this break. But we're heading right back up. And we're about ready to hit that positive territory. Not quite there, but you can see the scooter and why it's moving higher. Watch that overhead resistance. And like I said, I think with the rising rates, I'd be a little suspect of home builders at this point.
Well, I did mention earlier, media agencies bumping up against resistance. So we're trying to, at least I'm waiting to see if we can get a breakout. And a small cap stock that we've talked about on the show before really struggled back in late March and April, but starting to strengthen again. QNST. This is Quinn Street.
Oh, yeah.
Small cap, but it's got a scooter of 87 and it's been rising. What are you seeing with this one?
Yeah, this is very interesting. Here we go. Let's look at this area of overhead resistance right there. And this area of support that we got back here. I like the fact we got that 20, 50-day EMA crossover. That gave me an intermediate term trend model buy. We'd already gotten a short-term trend model buy all the way back here in that first week of May. If the buy signal's in, we got a flat PMO here because of that pullback, but I like to see pullbacks like that. And, today it is down over 1%. I think there's some potential. Again, I'd watch out for that overhead resistance at this point, but look at that nice volume pattern. Talk about some accumulation going on here. I would be looking for a breakout. Strong scooter. It's been just really strong the whole time. So I'm looking at this chart. I think it's quite favorable. I'd probably stop right around that 50-day EMA, maybe $12.
All right, sounds good.
Mm-hmm.
Got maybe a couple more here. Let's take a look at the footwear group. Nike recently, I'm not going to pull up Nike. I want you to actually look at a different stock. Nike has led the group up, and we've seen a breakout. I want to still stick with this small cap theme. And why don't you take a look at Decker's Outdoor, which is DECK.
All right. Life is better on deck. All right. Nice breakout here. I mean, I think that's the first thing that you notice when you pop this chart up here. It's been on a really long run. It's up over 2.25% today. I mean, I think that it's probably not done just based on the fact that we've got that high scooter. Volume patterns are still looking good. Look at all that accumulation. I would be watching for a pullback at this point, a pause. Looks like we got a bit of a pause back here, but after a 2.25% rise, I would look for a bit of a pullback toward this breakout area, and then we can move along past that. I'm going to just real quickly pull it in weekly. And again, here are my style buttons that I went over earlier. And let's see, actually, I want to look a little bit further out in a long-term version here. So you can see we are not at all-time highs. So there's still opportunity here to reach some of those all-time highs that we saw set, it looks like back in 2011. So we can't see that on a daily chart, but I think there's obviously some more upside potential here. Looks pretty good, the OBV. So I like it. I like Deckers. I'd hope to see a little bit of a pullback, though, toward that breakout area.
All right, sticking with the small cap theme, but moving to broadcasting and entertainment. Here's a stock that's been starting to gain some strength in May, but it has been in a downtrend. May start, it looks like it's turning up. Be interested to see what your PMO says. This is Sinclair Broadcast Group, SBGI. SBGI.
There we go. Oh, yeah, look at that really nice PMO buy signal. Came in whipsawed, to that sell signal, but came right back. I like that look. The OBV is doing well. You can see the scooter has been rising nicely. Let's go ahead and annotate just a bit here. But yeah, that PMO looks great. And, it's in that oversold territory. I talk about PMO buy signals above the zero line, but I think these oversold buy signals are usually pretty good. I'm looking here and I do notice that this one didn't turn out the way we would have liked, because we got the buy signal, just didn't do anything except really go downward. But we notice that the PMO bottoms still were rising here though. So I think that gave us a little bit of a hint with that positive divergence. That's a pretty serious positive divergence there too. So that really set us up when we got the next buy signal to get that really great breakout. There's that 520-day EMA crossover, short-term buy signal. I mean, this one looks pretty good. I'm going to just pull in some support and resistance so we can get an idea of where we have been and where we can go. So midway through what I call a bit of a trading range, you can see where we consolidated in this area. Wow, look at that reverse head and shoulders back here. That was
actually, I see 3 head and shoulders on this chart. That the reverse head and shoulders at the bottom, the topping head and shoulders, yep, they're on the top. And then I think
forming.
I think we have another one forming.
I think you're right. So I would look for that pullback maybe to the 20-day. Like I said, really strong momentum upward. Probably needs a little bit of a pause, although it looks like it's been consolidating here when I look in that thumbnail. So nice setup here. And yeah, I do like these reverse head and shoulders. If anything, we're going to get a V bottom, and I think those are pretty bullish as well. So
well, yeah, and you've got the same, you hit early May back the same low that we hit back in September. So we hit that support and bouncing off of it.
Yeah, it's looking good. I think this one looks pretty good. And I know a lot of people were talking about the broadcast group. There's a lot of, I think CBS is in our 10 and 10. There was another one I can't remember right now, but interesting space right now.
Yeah, there's definitely this small company that's been doing pretty well so far in May. I think they call it Walt Disney.
Yes.
Yeah, that one.
Tiny little place.
Yeah, that little tiny stock has been doing extremely well. Just this month, starting to reverse that downtrend, it appears.
Yeah, you had to stick it out for this buy signal, though, I have to say. It came in, it consolidated, actually went a bit lower. But again, if you hung through it, you had the rising bottoms on the PMO, and notice again they're about even or even declining somewhat. So that was a positive divergence. And now look, 20-50-day EMA crossover is about to occur. We're only 1/100th of a point away. So I like this. I do like it. Walt Disney is still looking good, I think.
Cool. All right. Well, let's go ahead and wrap up. We'll move into the 10 and 10, but let's quick get a summary slide here on what we looked at for the scooter report. Number of stocks. And again, we looked at them a couple of different ways. We started from the members dashboard and did look at the technical ranks and pulled up the scooters for the large cap, mid cap, and small cap. And then I zeroed in the Pro Control Center, went to the scooter reports, and was actually able to type in the media agencies and the broadcasting, and was able to find some of these stocks that we looked at today. So a number of really good examples. Great job, Erin.
Thank you very much.
Let's go ahead and move on to the 10 and 10.
Indeed. And we had, let's see, I need to add probably a few more. Let's see. No, actually, not much. So somebody mentioned Voya because we about a reverse candle, but we did yesterday. We did Voya, so I don't think we'll want to do that one. All right. In fact, actually, Voya's pulled back today nicely to overhead resistance, but that's just on the side. Let me add a few more, but I know the first one is Southwest Airlines, so let's go ahead and get that one going.
Okay, let's go ahead and do this. First one. Yeah, and Erin and I were talking about Southwest Airlines before the show, and to be honest, I had looked at it and didn't really care too much for it, although there are two things I do find somewhat bullish. Number one is I showed earlier the transportation chart, the fact that transports are trying to make a breakout. I think if we can get that breakout, that would help because I think more money would begin to flow in the transportation stocks in general. And love Southwest Airlines. When I looked at the weekly chart, I liked it better than when I looked at the daily chart because on the weekly chart, you can see after making this top, we had a pullback to around 50, made a new top, pull back to around 50, made a new top, and here we come back down close to 50. Now, if it breaks, if we don't hold on to 49.50 area, I would be out. So I'd have a really tight stop here on Southwest Airlines. But given, again, the fact that the market seems to be acting more bullish, the volatility index has gone down, transport's right on the brink of a breakout, I would, if I was looking at the stock and had to decide, am I going to buy it or am I going to sell it? I think based on the solid reward to risk at this level, I would be a buyer.
All right. And the most popular request in the chat room, and the chat room is to the right of your viewer from our the StockCharts TV tab on our website. So you have to be watching it live in order to see the chat room. But our most popular is BAC, Bank of America.
Oh, another one of those little tiny banks.
Yeah, it's kind of, I'm always surprised at which one's the most popular.
Well, I've talked in the past. I mean, I really think that the banks, I think this test of the 20-day moving average for me actually is a buy. I like the banks. Talked about it when the banks were down this level. I think the bank index may have been, I forget, 455, something like that, and talked about how that was a key area. And if I had to jump in the banks, it would be right then because reward risk was so strong. And you can see Bank of America did make a nice push here off of that. You do have some gap resistance overhead that we just approached and we backed off of. But I think with Treasury yields breaking out, I think banks are going to do very well. And I think Bank of America, after a nice move to the upside, has pulled back the last 3 days on lesser volume. We're getting a test of both the moving averages. I think, again, we're at a pretty nice reward to risk entry point because I don't think that you really want to stay in it if it goes much lower because it's probably going to go back to the bottom of the range. So I would look for a turn right here on the 20-day moving average. I like Bank of America. I like banks in general.
Okay. Let's see, the next one I'll give you is JD. And that, of course, is JD.com, Broadline Retailers. The person said they see a PMO crossover. I'm sure the PPO is similar and a double bottom.
All right. Well, let's see. We're definitely working our way lower with a higher, I use the PPO, but the PPO is definitely higher as we move down. This has been a key area of support. So I can't really argue with, taking on a position based on that. You can see multiple tests. We have not had a close below this 3560, 3570 area. We're sitting at 3575 right now, but you can see that this move continues to play out beneath the 20-day moving average. And so it really depends. If it were me and I was getting in based on this price support test, I'd probably keep a stop, maybe even an intraday stop below the low that was hit back in late April. I don't think there's any reason for the stock to go back down there. A couple of maybe pieces of good news is that as we've been selling off recently, you can see the volume has been lighter. So there are some positives here. Now, what you're looking for is for this low to hold and for a move back through that 20-day moving average. We've only had 1 or 2 closes in the past 3 months above the 20-day. So that technically would be would certainly be an improvement over what we've been seeing. So that's what I would look for on JD.
All righty. Let's see, the next one is Celgene, Celgene, however you want to say it, CELG.
All right. Not one of the better. I'm going to pull this one up on a relative chart basis because I do like some of the biotechs. And you can see the biotech here. The index is starting to turn back up. And I talked about the IBB. But look what Celgene's doing. Celgene was going down back when the group was going up. And then as the group has turned down, it's gone down with it. And now the group's turning back up and Celgene's still going down. I think 85 was pretty good support. We tested it, went through, came back up, tested it from underneath. Let me annotate this so you can see what I'm talking about. But right there at about $85. Notice we came up just above 85, but when we did so, we hit the 20 and we failed, went right back down. So I think you got to be careful because we are setting new lows here. Even though biotechs are starting to turn back up, Celgene relative to its peers is setting new lows. Celgene is struggling against the S&P, which is struggling against the small caps and so forth. So I just don't think that there's really anything appealing to Celgene at this point. Now, maybe value investors will begin to accumulate the stock because it has fallen, about 40% from the October high. So, there may be some reasons down the road to get involved. But technically right now, I don't think now is the time. I'd pass.
Okay. See, the next one I have for you is Northrop Grumman, NOC.
Okay. Well, I've talked about the defense stocks. If we can get back through 330 area on NOC, I'm going to feel a lot better about it. We're trying to get back through the 20-day, which is good. The group, when earnings came out, almost every one of them either gapped up or at least kind of held their own initially and then sold off hard. I'm not quite sure what was going on with the group, but I do think that the recent low is an area that I would watch very closely now on Northrop Grumman and the overall group. You can see here's the entire defense group coming down. Longer term, though, this is a stock that actually is performing pretty well relative to its peers. It's just that, and versus the S&P, it's starting to bounce back a little bit. The problem is that its peers, that this group has been so weak. I've mentioned it before here on the show. Defense stocks are one of those industry groups that you almost always want some exposure to. They tend to do well in almost any market. And Northrop Grumman, based on this chart right here, is one of the better stocks within the group. So I could make an argument. I think, again, if I was going to annotate this one, the two levels that I'd really watch and pay attention to, the recent reaction high right here at 330. We moved down, hit the 20-day, failed. Now we're going through the 20, but we're still trying to get through this overhead resistance. And to the downside, I think 305 or so is going to be a critical area on NOC. We don't want to lose that level.
Okay. Let's see. We haven't looked at Schlumberger for a while. SLB.
Yeah, SLB is the third largest holding of the XLE, trails only ExxonMobil and Chevron. And you can see that things are, it's really beginning to strengthen. The group is strengthening. Schlumberger is strengthening. But Schlumberger, relative to its group, not really, it's had a little bit of strength. But again, many of these bigger, larger companies are the ones that are struggling in the market right now. The Dow and the S&P clearly lagging the NASDAQ and especially the Russell 2000. So for me, it's more about being the big company out there. I'm not a big fan of many of the big companies. I'm not really trading the big companies because of this shift towards small companies. But I like the space, no doubt about it. I like the space. And Schlumberger is definitely trading better. I just think there are better candidates out there. So looking at this one specifically, I think this breakout right here now coincides with that rising 20-day moving average. So the best entry for Schlumberger would be a pullback below 72 to test that rising 20-day moving average.
Excellent. Let's see, another very small company, Micron, MU.
Yeah, another tiny one.
Yeah, we're looking at a lot of those.
Doing a lot of these relative charts as well. The semiconductors, talked about it earlier, they are down a little bit today, but still overall, I mean, we had a huge move into the end of the year and the start of 2018. And I think we're consolidating. I mean, we got to give this group a rest from time to time. We've seen a lot of mixed reports. There for a while, we had Intel leading the group. Now we've got AMD, which has been leading the group. Certainly Micron, as you can see, has had its runs where it has led the group. I think it's just consolidating right now. I do like the recent breakout. So let me get my annotation tool here. I think that the breakout that it saw above that mid-April high right there, I liked moving back up. Look at the volume come in on that move to the upside. Now, we have failed to hold that breakout level, which is a bit of a concern, but I'm more concerned about the rising 20-day. If we're truly trending higher, then I think that 20-day moving average right there should hold. So I'm bullish Micron, very bullish the market. So this is one that I do like. And the closer it gets to that 20-day, the better I like it.
All right. Torchmark Corp from the life insurance sector, or industry, which we were talking about quite a bit. TMK.
Yeah, let's pull this up on that relative chart as well. Yeah, I mean, it's definitely consolidating, hasn't had a breakout. You can see the overall group, though, has been going lower. You see these peaks that have continued to drop, and yet Torchmark has actually been kind of moving back up to where it had previously been. So we are seeing some relative strength, and that is shown here in this chart where we look at the TMK versus the Dow Jones US in life insurance index. So a little bit of a pullback here on a relative basis, but still overall in a nice uptrend. So in the group, I like it. I like some others better. We mentioned Voya, VOYA yesterday, which I own. I like that one much better. I think Julius talked about MetLife, MET, and MFC, which are very interesting. This one I like. I would certainly keep it on a watch list, and a breakout I would definitely trade. And I think that comes at a move above $88. You got another one?
Yes, the next one is, of course, for our Canadian friends. This is Cinemark in Canada, obviously, and the symbol is CGX.TO.
I can probably do it without the...
Or Cineplex, I'm sorry.
Okay. CGX.TO. Oh, well, I mean, it might be showing something on the PMO as a crossover because I'm seeing it here on the PPO, but that's not really my style. I mean, this is a stock that's been going down for a while, and it's really hard for me to argue that the momentum is building when it breaks to a new low on about the heaviest volume on the chart. So I'm not a fan. I think in order to try and get this, moving again, you're going to want to see, because that's where we broke down below that January low, and we did it on very heavy volume. Look at this move up, that shooting star, the failure to get through. That is not a good sign. And to the downside, here is your low. So I think we're in a pretty narrow trading range right now. I'd feel better about this crossover and the appearance of improving momentum if we actually got back up through what I consider to be price resistance. So I wouldn't do anything with the stock until it broke above about 29.5, but that's just me.
All righty. And our final symbol, Friday. Don't miss the entertainment of the WWE.
Wow.
Hey, I am getting ready to go on vacation. What can I tell you?
I'll tell you what, if the WWE is looking for somebody new to broadcast, I think you just gave them quite an audition. Okay, WWE, big breakout, heavy volume. I don't recall seeing this one on the earnings, but maybe it was earnings related. I'm looking back to see. Looks like earnings came out maybe in December or there, although maybe that wasn't earnings related. I don't know. Anyway, just looking at the technicals, I mean, look at the RSI, 90. No chance I'm chasing a stock that's got an RSI at 90. So I'm going to watch it. And if this was earnings related, I actually want to see how things transpire over the next few days anyway. These candles, this is a doji. It represents indecision. That's what a doji means, is indecision. So you gap up, you got a little bit of move to the upside, a big move to the downside, and then you come back and close right where you opened. And so the market's trying to figure out which way to go. Normally, when I see a candle like this after a gap up, I look for the gap to fill. So I would just say for me, it's probably not anything until I get a move back down to test this area of gap support down closer to 44.
Yep. Looks like all the excitement took place yesterday, really.
Yeah, a lot of volume. So maybe it was earnings. I'm not sure.
Yeah. All right. Well, that completes the 10 and 10, and the symbols are there for your review. I will have these up in the Market Watchers Live chart list, which you can find on the blogs page in the Market Watchers Live blog. So go ahead and go there. You'll find all of the recaps, etc. as well. And now let's go ahead and move into, well, let's share a little bit about ChartCon. Go ChartCon 2018 coming up in August. Gosh, we're really getting close now. We're going to be 2 months away, not too far away. So anyway, it is streaming live. It is online, so you can do this from the comfort of your own home or wherever you are at. You can join us for an amazing amount of speakers. You can see down here all of the different people. A lot of them you've seen here on Market Watchers Live, and so I'm sure you will really enjoy their presentations. And go ahead and register as soon as you can, of course. For $250, you're going to get all of those speakers. You're going to get to attend live like you do Market Watchers Live in the mornings. So you'll be a part of the show live or the conference. And you'll get all of those presentations saved for you as well, so you can go back and look at them. So as I keep saying, for $250, I don't know about you, but I could certainly make that in one good trade if I pulled out some really good information from ChartCon. So I think it's pretty much a bargain at this point. And I love the fact that you can go to a conference and you don't actually have to travel and pack and all of that. So consider it, and you'll find the information at StockCharts.com/ChartCon. And now it's time for our final market update, and then I'll get into some sentiment. All righty, let's get this completely updated. All right. So the markets, we started lower. It looks like we're kind of consolidating sideways. It's what I expected to see based on my indicators anyway coming into Friday. So really mostly unchanged. We can see the S&P has fallen somewhat. It's trying to make its way back up. NASDAQ also negative. Look at the Russell 2000 though. Nothing wants to, the Russell 2000 does not want to stop its rise. I think that's very positive for the markets in general to see the small caps carrying quite a bit of the load right now. TSX formed a flag here beneath yesterday's close. I suspect we're going to see it close higher before the end of the day. Treasury yields are continuing lower, but we still are getting readings above that 3% level, 3.07. UUP, big gap up. It's been pulling back all the rest of the day. Still up though, 2 cents, 24.61. Commodities are higher on the day, although oil, USO, is moving lower, currently reading 14.42, heading back up toward yesterday's close. Gold is up, GLD, reading 122.50. Not too much of a surprise, but when you see this decline going on in UUP, but both are up right now. So we're starting to see gold and the dollar decouple somewhat. And I'm sure likely if you look at the correlation chart between the two of them you would be seeing that happening right now. The VIX is about the same as it was yesterday at 1344. TLT on the rise with yields moving down so quickly, not a surprise to see a big gap up and TLT continuing to move higher. I'm not very bullish on bonds though. I think this is going to be a short-term little bounce, and read my Wednesday DP alert if you want to get more information on TLT and what I see getting ready to go on there. With that, I'm going to complete our final market update and move right on into the sentiment update. And I have a lot of interesting charts to show you for that. Of course, I think they're always interesting. What I want to start with, though, is talking to you about the fact that last week, I don't know if you all were there, but when I did look at the sentiment for last week, it was moving. 2 weeks ago, it had moved into that bullish area. People were feeling very bullish, and so consequently, or they were very bearish. So consequently, it turns into a bullish setup with sentiment. And last week, we were kind of shifting. It was looking more neutral to bearish. And now, when I look at the sentiment charts, and I'll pull up the first one, we're starting to see everybody getting too bullish. So now we need to expect some bearish activity. Let's see, there's my first one. All right, so the first one I look at is the 10-day moving average of the put-call ratio for the CBOE for equities and the OEX. And of course, this is data as of yesterday's close. You want to look for these, since they are put-call ratios, you want to look for very low readings. And that means that investors are bullish. That's bearish for the market, which is what's going on right now. So we're getting these lower readings now, and that means that the denominator, right, is getting bigger and bigger as it moves towards infinity. You start to move towards the zero. Bring back some calculus for you. So as we see this going down, that means that there are more and more people that are feeling more bullish. Now, we haven't reached the oversold territory yet. I would say at least for the CBOE put-call ratio, but we are continuing to head down. The problem is when we get to these lows and we start to turn up from there, that is when we generally are going to see bad things happen in the market. So we need to watch this very closely. You can see that equity put-call ratio is now hitting some oversold territory as so I would expect to start seeing that move back up. And again, when we get the bottoms on this particular chart, I would start looking for a drop in the market. And you can see we are already getting that. When you look in the thumbnail, we got a small bottom back here on the CBOE put-call ratio, and it ended up turning into a bit of a decline there. But the main thing I'm really looking for are these oversold readings. We need to watch when they start to turn up. And that's going to be bad news for the market, more than likely. So I would say at this point, we're seeing readings moving lower, and that means investors are getting more and more bullish, which is more and more bearish for the market. Let's look at the American Association of Individual Investors. This is a sentiment poll. You basically go to their website and say, I am bull, I'm a bear, or I am neutral. And these are the results that we get as of Thursday evening. And so what I wanted to point out with this one is we're starting to see somewhat elevated, not climactic readings yet for the amount of bulls at this point, but what is really important to look at is the bull-bear ratio. We're seeing far more bulls than we're seeing of bears. And the closer we get to that mark where we get the this over that 2 area, when you have twice as many bulls as you have bears, that's when you really need to start looking for a reversal. And again, if people are very bullish, that is actually bearish for the market. So we're seeing more and more bulls. It's building up that bullish sentiment. So I would expect to see a reversal or some consolidation. Let's look at the name exposure index. This is the National Association of Active Investment Managers. These are this is the big money. They tell us how exposed they are to the market. And at this point, we're seeing very elevated readings. There are a lot more that are higher, which is why I pointed those out. We get very elevated readings. Typically, that means, they're very exposed. That means they're very bullish, and that can mean bad things for the market. You can see where we've had some shorter term declines come off of these very high readings. We're not quite there, but we're getting there. We have the highest reading we've seen just in the last, in the first part of this year. The biggest one we got was back at the end of 2017. That was the highest exposure ranking that we've ever had since we started tracking this. And I think it's like 20 years, 15, 20 years of this. We have quite a few years. So that was very, I think that was a really good indicator that some serious bad things could be lining up. And that was part of this parabolic rally. Now, of course, it did continue to gain, but it came before that really difficult decline. So we need to watch these exposure readings. We're not quite in the climactic territory, but they are rising, and I would look at that as neutral to bearish. Oh, we're not going to call the Wall Street Sentiment Survey up right now. The other one I like to look at are the RIDEX asset analysis. And this is the RIDEX funds. RIDEX is now being operated by Guggenheim. And so, but the RIDEX funds, when they were with RIDEX, they had a group of bear funds, a group of bull and sector funds, and then they had the money market, of course. And they, every night, and they continue to, Guggenheim has kept it up, they report the assets in those groupings. So we can see what happens based on how many assets are being moved around where in these funds. And so what we like to do is we look at the bear funds and the bull funds in particular, and I look to see what's going on with them. Now this chart isn't completely annotated, right? So I am going to re-annotate it as we speak. So what I'm seeing right now, as you can see, is we're getting the bear funds we're seeing very low readings here. We've now reached an area that we haven't seen for quite some time. We are getting a decrease in the money market assets. So money is coming out of cash, and where is it all going? Well, mostly into the equity funds. So that means that everybody's feeling more bullish. And again, that is bearish for the market. When I look at the RIDEX ratio, we're now hitting up toward this overhead resistance. If we start punching through, that could be bad for the market. We ended up, I think that one, we ended up with a small decline. So that's what I'll be watching. Of course, see if we get that bull-bear ratio up above the previous tops we've seen. And again, smaller, the more bull assets are going on, the smaller the number is going to get. This is an inverse scale. So as this RIDEX ratio travels higher, that means there's more and more assets in the bull funds. And that, of course, means people are feeling very bearish or bullish, and that is bearish for the market. Sorry if it gets confusing with this contrarian, the fact that sentiment is contrarian. So you're constantly saying, okay, it's oversold, but that means that it's not bullish, it's bearish, and goes back and forth. So I'm trying very hard to keep it clear for everybody. So when I look at the RIDEX chart, again, I see some problems for the market. I think this is a bearish look to these charts when I start seeing these low readings on the bear funds in particular. We haven't seen quite the increase in the bull funds that we could. If we do, that's what's going to bring that RIDEX ratio above that overhead resistance line. So I'm going to, oops, I do want to save these changes. All right, so what I want to pull up now is the sentiment poll. I'm hoping you are all taking, if you haven't taken it already. And again, if you are watching this live from the StockCharts TV tab on our website, you will find the chat box and the polls on the right-hand side of that viewer. So that's where you can find it and make your vote in these polls. So currently, I didn't change any minds apparently, but everybody is saying that the market will close higher next week. I actually put my vote in for lower based on these sentiment readings, but also my short-term indicator chart, and I can show you that really quickly after we finish this. But yep, mostly unchanged. I think a lot of people are feeling neutral, and I can see that. If we don't move lower, I would look for prices to be pretty flat next week, just based on what I'm seeing as far as sentiment, and again, what I'm seeing as far as my short-term indicators are. And I'm going to put that one right up here because you need to see this.
See, I think we probably, Erin, should maybe be a little bit more specific instead of saying how the market will close, say how the S&P 500 will close. Because I'm looking at the Russell 2000 and I'm thinking, hey, we just had a really bullish week, but the S&P.
Good point.
Yeah.
Yes, I think that's how they ask the question for Wall Street Sentiment Survey. So I just pretty much passed it along to the poll. But yes, that's what it is asking. So, all right. So these are my short-term indicator charts. And this is why I believe that we're still going to be looking at some downside action, or at the very least, some consolidation. And, but this is a pretty flag right here when I look at this chart. So I would be looking for a breakout in the intermediate term, but right now we still need to get these indicators to decompress, my short-term indicators. But I think when you look at the intermediate term indicators, it does give us some bullishness for the intermediate term, because you can see I just got the breakout here. These indicators are continuing higher. They're not anywhere near overbought. So this is telling me that as far as the intermediate term is concerned, I am bullish. But in the short term, I have to remain in that neutral to bearish category. So what are you thinking? Are you going for the market closing higher next week? Sounds like it.
Well, I love the Russell 2000. I mean, even with the market pulling back, there's just no stopping the small caps right now. So I would not want to bet against a freight train. I don't want to get run over, but I don't think that's the question you're asking.
Right.
So I think you're looking at the S&P, and yeah, I think the S&P is going to continue to struggle on a relative basis. I think as long as, traders are looking at the market as though rates are going to go higher and the dollar is going to go higher, I think that's going to continue to put some pressure, at least relative pressure, on the S&P 500. So I would say neutral next week. We're toward that time of the month where typically the market struggles anyway. I do like the market. I like a lot of things that's happening. If by the end of the day, if we got a big rally in transports, say in the next 2.5 hours, we got a breakout, I'd change my tune on the S&P. I'd be bullish. So some of it depends on how we finish at 4 o'clock, but I would probably just play it a little more conservative and say unchanged, or kind of in that not really going anywhere for the next week.
Yes. Yeah, I could see, like I said, I could go either way, but I think I'm going to go with a more bearish opinion, and again, this is on the week, next week, so we're talking very short term. And like I said, when I looked at my intermediate term indicators, I don't see problems at all. So I am watching to see, ultimately this is going to finish up. I think the correction is starting to close itself down here a little bit, but we need to work out, I think, a little bit more off of this big rally we just had. So
yeah. I mean, if you look at, on that chart, you can see that those highs are going down, each of the highs over the past few months on the S&P 500, but put in the $ SML for the small cap, that S&P 600 small cap, and you're going to see a completely different picture.
Exactly. In this case, you had that really nice ascending triangle, really.
Yep.
And got the really good breakout. And typically, if you do measurements, the size of the base of that right triangle is where you would look for the height and then add that on. And that's what you should expect as far as a price rise. And that's, of course, well over 100 points. So coming off of 975, well, that would tell you to look for at least 1075.
Right.
So
yeah, and I was thinking more like closer to 1100, because I think it is actually above 975. If you shorten the chart.
Oh, you know what? I'm pretty sure. I know we don't have much time, but I'm pretty sure I have the short-term indicators for the Russell. I'm just gonna look really. Oh, here we go.
Wrong.
Or the S&P 600. Here we go. And I want to look at these Swinland trading oscillators. So, of course, this isn't really set up for you guys as far as the chart goes. But yeah, look, so you saw before we had the top and they were moving lower. And now as far as the STOs for the small caps, S&P 600, they've turned up. So it doesn't look like they're planning on unwinding all the way, which means we might not see the same from the S&P. We may see those indicators turn up.
Absolutely. Well, it is the end of another show, so I guess we can take a look quickly at the announcements or the update. Oh, you have your update.
Yeah, let me close this one down. I pretty much listed on my summary slide, just go right through it, Gretchen, all of what I covered. And then my conclusion is really the important part, but this slide will be in the Market Watchers Live recap. But we were mostly neutral last week. We're moving bearish for the market because everybody's getting a little bit too bullish. And so that's why I'm expecting a reversal or a consolidation next week, as well as because of my short-term indicators.
All right.
Weekly schedule next week, it looks pretty good. Monday and Tuesday, Julius will be in for me because I will be out. Tuesday, Julius will do a workshop, and David Keller will be here on Wednesday.
Yeah, it's going to be a good week. Hope you have a really nice 4-day weekend, Erin. You deserve it.
Oh, thank you.
And I got to celebrate my birthday on Monday without you.
Yes, and I told everybody your birthday was the day you were gone. So you get to celebrate it twice on the show.
That's all right. I don't mind celebrating multiple times. I want to thank everybody for stopping by and being with us today. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. We'll see you back here on Monday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.